Hello traders, today is Saturday 11/2025. I'm going to start with AFRM today. Keep in mind this content is not financial advice, it's for educational purposes only. Make sure to do your own due diligence and research before you risk your capital in any type of investment. Now AFRM, as we can see, still continue to go on breaking levels of support. One of the things that I said on my last video, in which I did mention AFRM, and that was on the 8th, was that it was very possible that we were going to go down towards 51.5. My thesis behind that was that if we break this level with any type of momentum, we might actually encounter ourselves at this area, which is 51.5. Now the momentum is coming with the volume that we're seeing. We're seeing an increase in volume. So you can tell that sellers are coming back into this name, rather than if you would see a decrease in volume, as you could see maybe in some other areas in this chart right here, for example. Maybe here, maybe this is not a good example, but I do think that we're probably going to hit 51.5, which is a critical key level for us at this point. If you break this, then you're gonna find yourself at 47, and then we're probably gonna go back to our good friend of support and resistance, which I'm gonna mark again. I did erase it, which was 42.5, I believe, back when we were analyzing AFRM in this area. Let me take a look. Yeah, so this actually goes back to this candle right here, give or take. So don't be surprised. Well, that's 41.7, but I remember clearly when we were talking about AFRM right in this area that one of the levels that was critical as far as support for a continuation of this move coming from this was 42. Once we broke 42, we went to 47, and now you see the whole story. But now we're on retracing a little bit. We are into, let's see if we are correcting already on AFRM. Let's go from here to here. Yes, so we're definitely in a correction, about 20-something% down since highs. And don't be surprised if again you see 51.50 and maybe a continuation towards 47. I think personally I feel like I'm pushing it a little bit. If I say 42 is in the books right now, if that is the case, well, I don't know where this is going to end, but I think that the market is at this point overreacting a little bit, especially over news. And AFRM and this type of companies, small caps and mid caps, are the first ones to actually feel the consequences of overreactions from the market. So it's critical maybe to come back from 55 towards 61. But if we continue in this trajectory, the MACD and the TSI are telling you, and the RSI, that this might continue going down. 51.5 is my next level of support. Now let's move on to our next name. And at this point, well, let's talk about AMD. And AMD at this point is looking horrible. What I said on my last video, in which was actually the 8th as well, so we were looking at this candle right here, is that if momentum comes, we're going to hit 111. If we break 111, I think 95 would be the next or something. I mean, it gets pretty ugly. It's already ugly. Now, one of the things you have to keep in mind is, there is an increase in volume as far as selling. That is not good. You have low liquidity, which is also not good. So 111, I think, is not that far away from us at this point. I don't know what AMD is, or what is going to have to come as far as news or something from AMD to make this stop. But I think that if earnings are similar to what we got before, just like this earnings report right here, and earnings are not that far away from us, they're about 3 weeks from now. If earnings are disappointing, I think that this thing is going to tank even more. I, at this point, don't see it as an opportunity buy. I just see it as a name that right now doesn't have a bottom. I hate to say it, it's still a falling knife. And I think I'm jumping into the bandwagon of those traders who are saying don't touch AMD. There is, I guess, another group of, traders that are seeing opportunity here. And there might be opportunity if you're buying shares, but if you're touching options or if you're trading options, this is not a good look. And another thing, even if you want to short this buying puts in this case, you don't know at what point this is going to start accelerating to the upside. So I see it right now as a very risky asset, to in which you can allocate any type of risk. So in that case, what I'm already telling myself, I have calls, they're June calls, which might actually move to the upside at one point. I think I'm just going to sell and take the loss, which is absolutely fine. I just don't like what I'm seeing on the chart. I did like it all the way up to this red candle right here. The last 2 trading days have been disastrous for AMD, and I really don't see right now a bottom if we break 111. If we rebound on 111, okay, fantastic, but then you really have to break 120. And, you are in this type of situation, in my opinion, of chop between what we had in 120 to 134. I think you might find the same situation between 111 and 120. That only in the case if we don't break 111 to the downside. If we break 111 to the downside, let's try to find, look at this thing. 95. So I guess I was correct when, you have this level right here, right on the 200 SMA, right at 95. And there is nothing really there to support this move. 911 is very critical for AMD. Let's move on to something more interesting, maybe a little more colorful, but and that is Clover. I haven't mentioned Clover in a long time, and by that I mean probably a few weeks. I really don't want to spend much time looking at my notes and see where Clover landed. But one of the things that I find interesting is that we had, especially last week, let's say the last 8 trading days. Not 8. I'm sorry. The last 6 to 7 trading. Yeah, 6 trading days, because we had a couple of days off last week and the prior week. Have been pretty reddish. But one of the things that we are seeing here, obviously, is this relative strength that we're having on this name. Still moving slowly, right? It broke this level of resistance at 3.5, and it looks like it might actually continue towards 390. Now, if this is this something I really want to jump on, not in how trading is looking. In general terms for the market. I'm not talking about Clover in specific. But what I really like is the fact that this is slowly moving to the upside without any major news, without any major attention from retail, as far as I'm concerned. So I see this pretty positive. The jump that you have here on the 35 SMA, you have momentum in these 2 candles, especially on this one on Tuesday the 7th, in which you were up almost 7%, 6.5%. That's pretty good. And then on Friday, you were up 1%. And no, that wasn't Friday. This on Wednesday, 1.11%. And then on Friday, you were basically flat, absolutely flat. I just want to take a look at the 5-minute. Yeah, absolutely flat. Interesting. Sorry, I had to yawn. And then the MACD and the TSI are not looking bad at all. The TSI is actually catching some divergence between the TSI line and the signal line. That is pretty good. The RSI is moving, and it's reflecting how flat it was on Friday as well. Volume is decreasing though, which is not a very good thing. But you're kind of in an area of low liquidity, I guess, if we zoom in a little bit more. But I just wanted to bring this up because I like how sneaky this name is being. Now your level of critical support right now is 3.5. If you break 3.5 to the downside, you're gonna meet 315 again, and who knows what happens after that. But if you continue moving, then your resistance level is 390, right on this area right here. Just interesting. I just wanted to bring this up because how this thing is behaving. Now let's talk about Costco. And I got um, I got calls on Costco, and the reason why I got calls is because two things. I find this type of names like Costco and Walmart and some of these more resilient when the market is choppy. So when the market gets kind of crazy, I kind of go into names like JP Morgan, Costco, maybe Walmart as well. I just even like I see names such as believe it or not, Coca-Cola or whatnot that they seem to be safer for me as far as allocating money, or as far as like looking at the chart and being more, less volatility and less uncertainty as far as how the move goes, as far as candles goes. So I did buy calls on Monday for Costco, and these are July calls. Like every single one of my calls are July, with the exception of AMD, which are June, but everything else is July. So I got July calls for Costco, and and I think I'm gonna sell them on Monday, even though they are for July. The way I'm seeing the market, I just wanna, if I have any nice percentage already on my calls, I just wanna take the money, and even if I leave money on the table. And for those who have been following me for a while, you should already know that I don't mind leaving money on the table as long as I make sure that my greens or my winners don't turn into losers. I just prefer taking money, and it works out for me very well. But anyways, this the decision why why I wanted, well, I guess the second decision why I wanted to get Costco, other than the fact that what I just explained, these names are more safe to trade, in my opinion, when the market gets choppy or there is uncertainty on the market. The second reason, I guess, is how the MACD and the TSI were starting to behave. And that's why I jumped in on last Monday. Now, the following day, I was down about, 2% or 3%, which was already a pretty decent amount of money considering how many calls I got. But then on Thursday and Friday specifically, these things were looking pretty good. Now, I don't know how we're going to behave on Monday, but based upon the lower indicators, MACD and TSI, seems like we are probably going to continue going up. There's low liquidity here, and my next level of resistance, to be honest, I think is a 35 SMA, which is this guy right here. Let's put a level on this week. And let's measure this as well. I just wanna. So we went down as of January 2nd, about 10%, almost 11%, 10.5%, yeah, 10.5% from highs till the second, and now you're coming back. That is interesting. I do think that we might actually continue, and I think, and again, I'm gonna sell my positions on Monday, possibly. Depends how the market looks, and depends how everything is going. But right now I'm just trying to be as conservative as possible, at least until the 20th or the 21st of this month. Now let's move on to the next name, and that is, if I can find you, where are you? FUBO. What did I tell you last time I mentioned FUBO? This thing is going down. Well, it was down on Friday by 4.5%. Okay, you still have a massive gap right here. You still have, in my opinion, at least from the week of this candle to the resistance level, to the support level, you have 21% to go. And to the beginning of the gap, I'm being super conservative, 38%. And to the beginning of liquidity, which is low liquidity still, you have 53% down. Now, I don't care. I don't have any, I guess, sentimental affinity to any stock that I trade. I do think that these setups are very interesting, and I like to take advantage of them. Now, are they risky? Absolutely, they are. you can find yourself on Monday with another 30% to the upside in a name like FUBO. This is a cheap stock, so it's accessible, very accessible for options, and obviously accessible for those who want to buy large amount of shares. So this could actually continue going up. But I guess my point to FUBO is that I see it very extended all across the chart. So the candles are extended. That's obvious. The indicators are extended. MACD, TSI, RSI is still extended. RSI at one point was up to 91, almost 92. And then you have low liquidity from where you are right now all the way down to, even let's go here, all the way down to $2, and you right now are sitting at 511. So I told you a couple of videos ago that I opened or I reopened my Robinhood account because I wanted to check that Robinhood legend, and I only put $500 just because I want to see how it works, and I never traded options in Robinhood before, so I was trying to see how that works, which is not complicated at all. So I think I'm gonna put the entire value of that account into puts for FUBO, and see how that goes. As a Lotto, it's only $500, so I don't know how many contracts I'm gonna be able to buy, and I'm probably gonna buy maybe beginning of February puts and see how that goes. I'll let you know how what happened to them. But again, my thesis is, and this is going to continue going down. Now, keep in mind, or be cautious with this area right here, which is a 389 level. You might actually have a retest and continue and move to the upside. So be careful on this area, and also be careful here, right when you are coming into the gap. Sometimes when you get to the gap, then liquidity comes back in, and then you shoot up. Look at the volume. Buyers are gone. You see it right here. This is not gonna lie. The histogram is also slowing down. The strength of the stock is fading. So I think I'm just gonna put that whole account, $500, that's it, into FUBO and see how that works. All right, let's move on to next name, and that is GEV. And I love the setup. Now, the market is choppy, the market is difficult right now. I understand that, but one of the things that I like about this is a new broke resistance, came down, and then buyers stepped back in. That was on Wednesday. Friday, buyers came back in. Let's take a look at the 5-minute. And this is quite interesting. So you have this on Wednesday. Under support, buyers pushed. Then pre-market, you were a little bit higher. Sellers stepped in and buyers took control again. And that is reflected on the candles that we're seeing here. That is quite, in my opinion, a good sign. A difficult time to trade a setup like this, in my opinion, considering how choppy the market is and how overreactive of news the market is. We have PPI next week and we have CPI next week. So that adds a little bit of more, I guess, paranoia, if you want to jump into any of these names. So be careful, but I like the setup. I like the fact that buyers are coming in. I like the fact that the volume is not that bad. I mean, the volume was lesser in Friday. By Fridays, you actually find less volume, but you had an increase of buyers compared to the prior day, prior trading day on Thursday, or I'm sorry, on Wednesday, and then Friday had a little bit less volume, but it seems like buyers are really trying to push. Trust me, I don't think I'm the only one seeing this setup, and the reason is because it's pretty obvious. Let's move on to the next name, and that is, of course, I'm going to talk about HIMS, because let me take a note on this one. Down 1.24% on Friday. Let's take a look at the 5-minute before we go to the 1 hour. Chop. You still couldn't break level of resistance here on the 5 and obviously on the daily chart. You're right under resistance at 25.5, which is fine. I do think that 23.5 and 21.7 is still in play. I wouldn't be surprised, and we get to this point, and then we're coming back up. Or if there is, I guess, if the market stabilizes a little bit, you might actually see a move breaking 25.5. But for now, focus on these lower levels. I would focus on these areas more than what is coming to the upside. And the reason is because there is lack of liquidity. Volume is not the best. MACD and TSI is still bearish. RSI is kind of neutral, but most a little bit on the bearish side. So be careful with HIMS. I don't think it's a right time to jump in as much as I would like to get into this, because I think at some point this year, HIMS is really going to shoot up again. Now, maybe we're not seeing that happening. The weekly chart doesn't also look very good. And looking at the weekly chart, I think that we can probably go down towards the 35 SMA. If that is the case, then as I was saying, 21.7 looks more reasonable as far as this time frame on the weekly chart. Keep an eye on these levels of support, 23.5 and 21.7. Now, I'm going to do something different today, and I'm going to go over the Magnificent Seven and give you my opinion, which is going to give you a better idea of what I'm seeing on the market, at least on my opinion. So let me take a quick note on this. Okay, so let's start with Apple. It looks interesting. One of the things I did buy, I do have calls on Apple, and I did buy more at 231. And in some of my videos, maybe Apple, or maybe the one on the second, I believe that was the last. No, I don't know. I mentioned Apple on the second, the fourth, and the sixth. But one of the things that I said is 137 was already a gift. 237 was a gift. 133 is obviously a gift. But don't be surprised that you actually come down lower towards 229 or even towards 225. Now, the lower we get, I think the more opportunity there is going to be to, continue moving to the upside. Now, worst case scenario, you continue going down into earnings, but I don't see that as a very likely scenario. I do think, however, that earnings could be disappointing. There have been disappointing lately, so especially in the last two reports. So we'll see. Oh, look at this move right here. You had this drop, then you came back up, and the same over here on this earnings report. So we'll see how we actually behave on Apple. But I did get, I increased my position once we got to this level. Buyers came back in, but there is still a lot of volume and momentum, I guess, for Apple to go to the downside. It was down 2.41% on Friday. It was basically flat on Wednesday. It was down 1.4. It's been moving aggressively, down 1.14% on Tuesday. Monday, it was up pretty much flat. But look at this candle right here. You were down 2.62% on the second. So not a good start of the year for Apple. I would sell my position at a loss, I guess, if we go towards 25, and I would sell and then probably rebuy, and move the date of my calls. But I think that Apple is setting up for something special. I like the fact that you rebound on the 233 level, but one of the things that is pretty obvious that I don't like is that the MACD and the TSI are very bearish right now. The TSI is looking super bearish, even more than the MACD. So we'll see what Monday brings. Let's move on to Amazon. Amazon rebounding on the 215 level, right on the 35 SMA. If this level actually holds, we are probably gonna get into some chopping action here. I'm not getting too bullish at this point, and the reason why is because I think that the market still has 1 or 2 weeks of selling, which is at least somewhere around 5 to 8% more to the downside market wise. which is going to put us on a territory of correction. And at that point, we're probably, once we get into earnings, I think names are going to start moving to the upside. I wouldn't be surprised that Amazon actually does good on earnings for obvious reasons, right? You have AWS doing pretty decent, and then you also have numbers coming from the holidays, and some consumer reports mention that the consumer hasn't slowed down, which is something that benefits Apple, but also Amazon, but also Apple, for example. But for now, as far as what I'm seeing on the technicals and the lower indicators, these guys right here, they still look bearish. We'll see if we turn this around and get into some chop going into 233. But if we get to that level, we're probably going to get rejected. I don't see volume or momentum going into new all-time highs, at least next week. Hopefully I'm wrong, but I'm just not seeing it. And maybe you see it, you're seeing what I'm seeing as well. This is not adding up. Let's talk about Google. Google is really holding this level at 191, I believe it is. Yeah, 193, 192, 193. So really fighting it. MACD and TSI are not looking extended, are not looking too bearish, I guess. They're pointing down and slowly moving towards a zero line, but it's kind of like a slow move right now for Google. It's not looking bad. And I think if this trend continues, it's probably going to hold this area very nicely. Keep in mind that if you break this level of, well, you're right under this level of support, but if you break or you continue moving to the downside and you break this trend line right here, things might get a little ugly. You're going to go pass through the 35 SMA, and then you're probably going to meet this gap right here. So if that is the case, things could get ugly, but if it holds, I think it's going to chop in this area, which would be the best thing that could happen for Google, especially for next week. I think next week is still going to be, interesting. All right, let's move on to Meta. Max I'm not going to mention Max. Meta, it was the only green name out of the Magnificent Seven that was green. It was quite interesting because it was all over the place. You had this, sellers coming in, buyers stepping in, and then sellers. You had this double bottom right here, right on the 200 SMA on the 5-minute chart, and boom, you went up. Then sell off again, rebounding on the 325 SMA, which works pretty well on the 5-minute chart. And so yeah, Meta is looking interesting, to say the least. Now let's move on to Microsoft. And Microsoft, again, at 415, this level of support is super strong. MACD and TSI are not looking the best. I think that if 415 breaks, you're going to go straight to the 325 SMA, which is this line right here. But if you rebound, you're going to chop here. Again, next week is not going to be much different than last. NVIDIA, I'm glad I saw my position here, my calls right here. Coming down, MACD and TSI are really turning around to the bear side. I think that 130 could be the next stop. It is critical to maintain this level right here at 136. If there's momentum coming down, which might come next week, I'm saying, 130 is probably going to be your next stop. And at that point, you have to assess what is going to be the move for NVIDIA. Now, let's move on to Tesla, and I'm finishing the video with this. Tesla was flat on on Friday. Not a bad day, but still, this chart needs a little bit more time. I do believe that 365, which was my price target to the downside, at least in the short term, is still in play. We can actually continue going down towards this area and see how we behave once we get here. Right under the 35 SMA, MACD and TSI are bearish, but seems like they are slowing down. Look at the TSI, looks like it's slowing down, and the RSI is flat. So I guess my point to this whole thing is that we are going to have a choppy week next week, a difficult week to trade, in my opinion, especially if you're day trading or short-term swing trading. So be very careful. Be mindful of your money. If you see green in your account, you know, or what I do is I take the money. I'm selling my Costco calls because they are green. I'm out, and then reposition yourself. Be very careful. If you have to take a loss, just take a loss. I mean, setups are always going to come, and if you're winning, then also take the wins. That's all I have for you guys. I will see you back on Monday. Thank you. Bye bye.